Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 10th of January. All right, now just looking at the major news, there's no major changes across the board. This US-Iran issue, gets hot, gets cold, gets hot, gets cold. The market's a bit over it, so I'm not really seeing a big follow through there. One thing that they're sort of going to start leaning on Iran is they're attributing the down Ukrainian airliner to Iran as well. So that may ignite things. I think what they're trying to do is just diffuse the whole situation, saying, well, we took out one of your guys, you took out 176 of ours, et cetera, et cetera. Anyway, it's all a bit of a mess. One thing I've noticed, though, in this section here, which is the central bank area, a lot of the central banks, the Fed, even Polaris, the Bank of Canada, are all starting to refer to an easing of the overall global pressure on the global trade, global growth, I should say. And this comes back to the US-China situation. So if they're coming, China's Vice Premier, Louis, coming over to sign a US trade deal, well, that's a good thing. Takes the pressure off all the central banks in regards to global growth. So that could change the picture very clearly or quickly across the board. Now, when you're looking at the if this is real news or not, you can generally tell by the move in the currencies. Dollar yuan is starting to move lower again, and a bit more structure instead of these spikes up and down. This is actually really happening. It's going to be good for the yuan, good for the Chinese economy, get everything back on track. And that's seen the US dollar slowly tick to the top side on the dollar index. You're looking at the equity markets. Well, US equities, you'd have to say pretty neutral, bit of risk on if anything, because equities are up, and that's the structure of what we've got there. If you have a look at the rest of the major currency pairs, okay, you're really trying to isolate. I've left a few of the trend lines in place so you can see what's been happening over the course of the week. The Aussie, to me, probably hasn't really, like none of these currencies, as much as they are sort of slightly trending in the short term, like the Aussie's trending down here, Kiwi's trending lower as well. But these are all on the hourly timeframes. On the daily and weekly timeframes, they're not really doing a hell of a lot. But if these moves continue, then we will start to see momentum really pick up. Over the course of the week, you saw the initial spike down there on dollar yen as the US-Iranian issue sparked up. And look where dollar yen is now. It's really testing. It's about to break through a daily resistance line up around 109.50. And that could really, it's going to push dollar yen into a bit more of a stronger up move. And you might see the dollar spike and all these other pairs go down. So at the moment, euro, well, it's just drifted through that support trend line. But no one's really willing to get stuck into it until they see what the US non-farm payrolls are. And this is actually where sterling, without any more, Brexit news, is starting to follow euro and the dollar move. You can see how it's moved down through the trend line, coming back to test that previous support, which is now acting as resistance. It's sort of been a bit of a mixed picture. And dollar CAD, oil is back at 59.50. I mentioned this a few days ago. If you look through the FX Market Insight, if oil dropped from $63 below 50, we would see upward pressure in dollar CAD, and that's exactly what sort of happened. Of course, we had some really weak IB PMI numbers the other day, which led to this strong push. But I would say this move here is the last squeeze of the short positions. Now, on the daily and weekly charts, dollar CAD is still going down, right? So don't get caught up in the price action here. To me, things are not super clear just at the moment because we still have a few weird things going on. Now, how can you find that out? Well, if you come to the MyFX Trading Hub, right, you'll start to see where everything's sort of lining up. Okay, now the dollar CAD and dollar Swiss, they are still weak sells. Now, this is a little bit, you might think this is a little bit odd considering the dollar index and dollar yen are going up. Well, short term on the hourlies, they are going up, right? But on the daily and weekly charts, they're still going down, or they're still broken down through those trend lines. So don't get caught up in this. If they continue to go higher, that will change, probably to neutral. But this is a little bit out of whack. And that's what happens with these geopolitical events. It creates a bit of a discombobulation, especially in pairs that are basically safe haven or not. What's happening on the big picture? But basically on the big picture, dollar CAD and dollar Swiss broke down significantly. Of course, they're rallying back on the hourlies, but they still haven't come back far enough on those other time frames. Now, the other pairs here, Euro, Sterling, Aussie, Kiwi, all still pretty much weak sells at this point. As I said, since the start of the year, there's a few geopolitical events which are slowing things down. So we haven't seen any major trends yet, but we are seeing movements on the hourly charts. And I've got to thank Heather we've added a new color here. It's just for a psychological levels on support and resistance. It's going to be purple. And you can see that if you scroll down the bottom through the full assessment, you can see the strength gauge, psycho, short for psychological, obviously. Don't want to get caught out on that one. All right, so that's where we are. So today, what do we got? Well, it's a bit more of the same. These two here, a bit of a question mark, okay, whether they continue to fall or rally with the dollar. So you may want to just keep an eye on those. But we do have some pretty key events coming up. The Aussie, to me, is starting to trend really, really nicely over the course of this week. Don't forget, there's these national fires, which are going to impact economic conditions or economic numbers for the next couple of months, if not 6 months. I think we're going to see those fall off the face of the earth. We've got retail sales for December coming out. That won't reflect, I don't think, the situation. But if these numbers are weak, this thing's already going down. And, we've got to start to look, if you're not short, you've got to start to think about getting short. Then as we come into that North American session, of course, we've got the two big employment numbers. Now, the non-farm payrolls dominates, okay? So focus on that. If you're focusing on dollar CAD, well, sure, but you want to make sure both numbers line up. So you get the situation, if the Canadian employment numbers are strong and the US numbers are strong, well, you're going to get a bit of a volatile movement in the price, but it'll stick to basically where it is. And at the same time, if you do get, weak Canadian numbers and strong US numbers, well, then obviously dollar CAD's going to be through the roof and vice versa if it's the other way around. So really, most of the currencies will be on hold throughout the course of the day, unless there's some other geopolitical news or unless these Aussie retail sales figures are wild. Most traders globally will wait for this big number. All right. Now, like I've spoken to many traders before you jump into this, let me just show you what you're dealing with. Okay. Let me just blow this up. Now, the non-farm payrolls, I know a lot of traders out there, a lot of companies say, oh, watch me trade the numbers. This number, most professionals would not really jump on it, right? Look how many variables are coming out. Now, I'm just isolating the US numbers. You've got the payrolls, private payrolls, manufacturing, government, employment rate, average earnings, labor force participation, et cetera, et cetera. There's so many variables here. It's very hard to work out what to focus on. Now, generally speaking, historically, it's just the non-farm payrolls number, okay? Then you've got the unemployment rate, and the last year or so, the central bank has been focusing on the average earnings. So they're the sort of probably three key ones that if you wanted to focus on something, focus on those. Once again, you need them all to line up to get a clean move. If they are one's up, one's down, you're going to see, once again, volatile price activity and not much overall movement on the currencies. Now, bear that in mind with the, if you're trying to bang out the Canadian numbers, we do have the numbers here as well: employment change, unemployment rate, full-time and part-time, and participation rate. So you got a bunch of numbers there as well. Just bear in mind that full-time employment has a lot more structure. So if the employment change is high and you get a part-time move the opposite way, it will neutralize the move. All right. So this is trading the employment numbers, put it this way, is very tricky at the best of times. But you put two unemployment numbers together, and you really have to assess all of these numbers before you jump in, right? It's very tricky, very hard. I wouldn't be, really, I wouldn't say don't trade the event, but at the very least, make sure you are controlling your risk. Very small trade size. You're looking to make money out of the event. You're not looking to make $1 million. All right, that's what you got to focus on. All right, guys, hopefully that helps through the day. In about 20 minutes, by the time I get this video on, probably about 15, the Aussie retail sales figure. As I said, this is the first number out of the Australian market since the New Year break. So keep an eye on this. Weak numbers, it could go down. But at the same time, I mean, I'm still trying to look to get short Aussie regardless of what happens. But if we get really strong numbers here, we do have a really nice trend line here that's set up. So, I'm talking like exceptionally strong. We might see a spike higher, But any sort of spike higher, the market's going to be looking to sell anyway, because structurally, and with everything going on in the back end with the fires and food production, everything's going to be affected. I could imagine this thing's going to go down regardless, but short term, it's going to come down to the actual number itself. All right, guys, that's pretty much a wrap from me. Hope you have a good trade day. Just remember, hang on to your capital. Non-farms are not the best number to be banging away on. All right, guys, have a good one. Cheerio.